Good evening. This is the Elliott Wave update for the S&P 500 for Thursday, December 2nd, 2021. Another very bizarre day in the markets. After yesterday's strong midday declines, the markets just kind of decided to basically explode higher, but not in unison. The NASDAQ continued to move lower as it completed another section of the decline in progress, while the S&P dipped down in support of the NASDAQ and because of the stocks that are in both indexes. But the Dow rocketed higher right from, let me see, it would have been about, pretty much from the opening. The Dow just rocketed higher and was actually up over 700 points at one time during the day before it kind of settled back down and then settled in. The S&P itself closed up over 69 and was up over 70 points during the day. Again, stellar performances, and did put in the moves that I am expecting. And so I'm kind of holding to the counts. There are a few nuances here and there, particularly here in the S&P. And one I'm not going to mention just yet because I got to let more of it play out, and let's just see what happens from here. So back in the S&P, I do feel that we are continuing to work our way lower in the beginning stages of the larger fourth wave correction that began off of the all-time highs at 47.42. And today we again got close to 4,500. And I basically wanted to see it below 44.96 to put in, at least on this sub-minute level or degree, the completion points for the sub-minute, or the minute 3 actually. So it would have been a 4 and then a 5. And so far it looks like we got the 4 in. We got a nice ABC up. I'm not very pleased at the height of this to this being wave 1. Wave 4 is definitely overlapping, and I understand that, and I do have a backup for that should it be needed. But right now I'm letting that overlap occur. And there's a couple of reasons for that, but I believe that we're still going to come down. And if we do, then I'll take another look. But right now, I am allowing for it. And because it was still just a correction within this third wave, I understand the crossing over, but the whole process here has been very tight and squeezed, even though the patterns itself are following solid Elliott. Like there's 5 down, then 3 up, and this was 5 down, and this was 3 up. So I'm going to live with it for just a moment, and we'll see what happens from here. What my expectations would be is for current resistance to hold, to now hold, and for the S&P not to really catch fire again, which it can tomorrow. It's expiration. We may see that again. You know, the push that we have seen in a lot of the tech titan stocks that have just moved the market just freely. And that's all coming through weekly options. And so we have an expiration tomorrow. It's the first December expiration. We'll see how it goes. Right now, things were kind of lining up with the possibility that they were just going to push and push. But the stocks that I'll be looking for, of course, are going to be Apple. They're going to be AMAT. They're going to be Amazon, Google, Intuit, Microsoft, and Tesla. NVIDIA, it's in there, but not as heavy. Tesla still in play there. I don't know if it's waning and they've just moved to another stock or two. We'll see. So I really, any moves higher, if it breaks 4,600, I mean, literally, yes, I could count this move, and we'll see how it happens. This may be the end, and it's in a small failure, about a $12 failure. So not to please, actually not $12, about $8 failure. And that could be acceptable. And I may put that 4 back over here and bring this down and consider it the minute 3. And now we're doing a minute 4. But even under that one, you can see just because of the nature of all of this crunch, where they really weren't expanding the way I had expected in terms of providing enough depth. They do it on the turns themselves, but then it ends up maybe looking like something else when things start to overlap. So quickly, I'm going to tell you what my other count, and it's the alternate view right now, and then that it's a series of ABC rallies and declines. So this would be A, this would be B, this would be C. This would be X. This would be A, this would be C. This would be another, just an ABC, the second. This would be an X. And then we get another ABC down. So it could be a triple ABC corrective pattern with a downward bias, as it should have in this particular position. And then once it's all the way down there, and basically, to be honest with you, that's the level. And so we shall see. And when it gets down there and it's a C wave and it's a triple ABC, then it's going to be marked on the intermediate degree level as an A, intermediate A. So this would be a minor A wave, a minor B wave, a minor C wave, a minor X wave, a minor A wave, a minor B wave, a minor C wave, a minor X wave. So it's either that or it's subdividing one more time. And that would be putting this in a 1. We get 1, 2, 1, 2, and then 1, 2. Now, if it's that, this thing falls off the cliff. It just rolls and it drops precipitously tomorrow in a third wave. Similar to that, but even bigger. So all things are possible. And what held it up today, of course, is the component stocks that are just in the broader market. And they were purchased like there was no tomorrow. The Russell up 59. Now suddenly everybody's running into those. And I keep having to remember, it is December 3rd. It is the first week of December. It is when new 401k money, new IRA money comes pushing into the funds, and they've got to put it to work. So the buyers were very strong today, and they were just buying whatever they can get their hands on. And so that was more cohesive with the fact that it's, that time of the month when new money comes into the funds and then it gets placed into the market. So we'll see how this all works out. I do have a couple of ideas on how it's going to be labeled. I'm not changing the labeling right now. And I'm just going to be looking for the next down leg. And then I will work out the labeling from there. Because this actually could be another 1, 2, and then just a third. So it's, as in the NASDAQ, this minor third wave would be subdividing now. There's once, there's twice, and that would be the third. And that's just what the NASDAQ did. And so that would suggest that we've got a 3, then a 4 and a 5 to complete this one, then a 4 and a 5 to complete this one, then a 4 and a 5 to complete this and this. So, well, that one, I'm not sure what happened there. There we go. So we will see how this all pans out. And again, Friday, I'm not expecting to be a typical Friday. I think it's going to be a very active Friday. I think there'll be a lot of business, a lot of volume as a lot of these things unwind. So volatility should be the same. And I hope that everyone remembered that I said volatility will be increasing on both sides, upside and downside, because that certainly was the case today. This is where I'm going to leave it for right now. And trade smart, trade using the moving averages, trade using the Elliott, using the Fibonacci. And then it helps, it does, particularly the moving averages, give you a quick gauge on where entries should be, where exits can be, where support and resistance will come in based on where the moving averages are sitting in comparison to the price action. And the next update will be on Sunday, December 5th.